Alright, hey everyone, it's Mike from Orderflows and welcome to my presentation, Orderflows 2.0 Trading in Sync with the Market. Now my goal for you today is to show you the new developments in order flow analysis, show you how to let the market tell you when to buy or sell, how to trade in the present based on what's happening now, and how to easily see high percentage order flow trade setups. You know, as traders, that's what we want. We want high percentage trade setups. We want the trades that are going to put the money in our trading account. And if you stick around to the end, I have a special gift for you. It's my 150-page book, Trading Order Flow. You're not going to get the actual hardcover copy. What you're going to do is you're going to get the link to download it online, and you can download it to your phone or your tablet. It's in PDF form, so you could read it pretty much on the go. So, briefly, who am I? For those of you that aren't familiar with me, my name is Michael Valtos. I'm the owner and founder and trader at Orderflows.com, which I started 3 or 4 years ago, 2015. Prior to that, I spent 8 years at JP Morgan as Vice President of Futures Trading. And it's not like some job where I just sat in a corner office all day long and looked at numbers. No, I sat in front of the trading terminal for 8 years there, and we traded every day. Did the same thing at Commerce Bank as a licensed Eurex trader. I spent 3 years there. At Cargill, same as well. Daily trader there. I ended up being a trading desk manager for them in Singapore. And prior to that, I spent 2 years at EDF Man on the global macro trading desk. And, you know, we literally traded everything there that you can imagine. You know, EDF Man is a big English trading company. You know, they've been around since the 1700s, got their start trading sugar. And prior to that, I started on the CME floor with Dean Witter as a runner, and I left the floor when Globex and Project A and NYMEX Access started taking off in the mid-90s. And I worked upstairs on their off-the-floor trading desk. I spent 3 years there. So that just gives you a background of who I am and where I come from. And, you know, what I talk about is based on my own experience trading on the institutional side. And, you know, when I talk about the importance of volume, I know because, you know, I used to pull those, I don't want to say call them tricks or anything like that, but, you know, I know how volume influences the market because I've had to trade big size and I've had to finesse it into the market without telegraphing it to the market. You know, how to get the advantageous price, how to get a good fill, you know, and all the trading that I did, you know, it shows up in the order flow. It shows up in the volume. There's no way to hide it once it's been executed. You know, you can hide your order through various types of, now you can use algos. Before you had to do it manually, but you know, once it trades, it shows up, the trade shows up in the volume, it's disseminated out through the world in time and sales, and if you're not looking at that information, you're really leaving an important part of trading out of the equation. So in 2013, I left JP Morgan to spend more time with my family. I had recently gotten married, we had our first child, and I really just wanted to spend time with my family, you know, and that's what trading can do for you. Is if you're successful, it's going to give you some freedom in your life to do what you want to do. And shortly thereafter, about a year later, I started writing my book, Trading Order Flow. And I was still trading, and I realized that, you know, with computers, they can do the heavy lifting for you. They can do some of the analysis for you. So I was trading with the order flow using a volume footprint chart from another software vendor, and it was just a basic volume footprint chart. I was paying over $1,000 for it a year, and all it did is just told me the volume. That's it. But you know, I know that software can do much more. And for me, you know, I was looking at certain things in the order flow that I felt could be programmed. You know, areas of price rejection, price support, absorption, and other little market nuances. So I created the Orderflows Trader software, and it runs on NinjaTrader 7 and NinjaTrader 8. However, with the new NinjaTrader 8 changes, so to speak, you know, on the way they handle data, it really blows NT7 away. And recently we came out with a new version of Orderflows Trader specifically for NT8. We still have the NT7 version, but the NT8 version has more features to it. So, you know, if you're going to use NinjaTrader, go directly to NinjaTrader 8. Don't stop at 7. I mean, and that's the future for NinjaTrader 8 at this point. They still support NinjaTrader 7, but all their development goes into NinjaTrader 8 anyway. And what I'm presenting in this presentation is what I've developed for myself and built my trading career on. And I hope you can find things that you can use and adapt into your own trading. I'm not saying that you have to follow what I say just because I say it. No, you have to evaluate everything you come across, whether it's from me or from other traders, and decide if it's going to help you. If not, reject it. We all read trading books, right? Everyone's read at least a dozen trading books, and you don't take everything that person says as gospel. No, you take what resonates with you and you apply it to your trading plan. So let me be clear. You have to make trading decisions. That's what life is about. That's what trading is about. In life, it's all about making the right decisions. In trading, it's also all about making the right decisions. Order flow by itself is not a red light, green light trading system, but when you understand order flow, the market will become very clear for you. Decisions will be a lot easier, and your life will be, I think, a lot less stressful. Now, before I begin, let me go over a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, before every presentation, I always go through the disclaimer because, I want people to understand that there is risk involved in trading. It's not like you just open an account and you automatically make money. No, you could lose all the money you put in the account. You can lose even more than that. But, if you follow a good plan, a good trading plan, and you have a good set of tools to trade with, your chances of success are much higher. Now, I've worked with a lot of successful traders previously in my institutional side, and I've worked with a lot of unsuccessful traders on the retail side. And basically what it comes down to is successful traders make the best use of available information, and they process that information in an intelligent way. What I mean by that is having a firm grasp of the elements of market analysis, as well as a sense of which factors are important in which situations. And, perfect example, I see people all the time using, off-the-shelf indicators such as, RSI or MACD, and they just swear by it as gospel. They don't take it in context with what's happening in the market, and I think that's the big problem. Just because, an indicator says, well, we're overbought, doesn't mean we can't go more overbought or more overbought and more overbought as the market's trending. Every time you try to get short when the market is overbought, but you're in a trending market, you're going to get your head handed to you, okay? And, take things in context and try and think about what's happening in the market and use it, right? And, apply it to, just common sense analysis sometimes. Sometimes I get the feeling that some traders just throw out common sense out the window when they sit down in front of a trading terminal. Okay, so the first thing I'll talk about is the new developments in order flow analysis. Now, this is specific to the Orderflows Trader software. And like I said, when I developed the Orderflows Trader software, there were 4 indicators that we had programmed in there. And recently, with our launch of the updated version for NinjaTrader 8, we've added another 4 indicators in there. And well, it's actually 3 plus we've enhanced 1. So it's a total of 7 indicators you get in there. And that's what, being good at something is, you got to keep innovating, right? You got to keep adding things to it. Like a perfect example is Michael Jordan, the basketball player. When he started out, he was just known for dunks, right? That's it. That he'd win the slam dunk competition, even though he was a good overall basketball player. But then, as he's progressing in the NBA with the Chicago Bulls, he realized his body couldn't keep taking the fouls. So he had to develop more. He started using a jump shot more. Then, he started using a 3-point shot more. So, it's about expanding your game, and trading is the same way. If you just trade with one indicator, how does your indicator work? Does it work best in trending markets, or does it work best in sideways markets? Because if it's good in trending markets, when the market's in a sideways mode, you're not going to make any money. You're just going to lose money. And the same as if you have a trend trading system. If you're trading a trend trading system in a sideways market, you're gonna end up taking a lot of losses until the trend comes. Some people are fine with that, but oftentimes the psychology of traders is, they start having a few losses, they give up and they stop trading the way they're supposed to trade. So, that's why we keep developing tools to add into the Orderflows Trader software so that you can take advantage of trending markets, of sideways markets. So, it's like having a grocery store, right? You don't sell just one item. In a grocery store, you sell many different items. And I'll say it's about diversification, but you have to have a method for trading when a market is trading one way and a method for trading it when it's trading the other way. You can't just keep trading one system in all market conditions. It's just not going to be viable. So one of the new developments for Orderflows Trader 2.0 is we have what we call prominent POCs, market sweeps, multiple imbalances, and we've enhanced the existing trap traders indicator. So these are all in addition to the single prints, the existing trap traders, the order flows, divergence, and the ratios. The ratios are an indicator that now, many other software are adding it into their native software. And, they don't want to give me credit for it, but, people that have been around with me, people that have been trading order flow for a long time know that I'm the one that developed it. And, they'll send me messages saying, hey, so-and-so software added it into theirs. They're calling it the, order flow algorithm, nonsense like that. And it is really nothing earth-shattering about it. But, I just wish, they'd give credit where credit is due. That's all. Order flow is available to everybody. And, that's why I do presentations like this. That's why I post videos on YouTube. That's why I offer my book, is because, a lot of people don't know what to look at, don't know what they're looking at. It wasn't explained to them properly. You could have a software, talks about all these things, shows all these things, but if you don't know how to use it, it's going to be useless. What's the point of having ratios if you don't know what ratios to look for and what they mean? So, it's one thing to have it on your software, but it's another thing to know how to use it. So, first one I'll talk about is prominent point of controls. And, point of control in the order flow is the point in the bar with the most volume. Now, what the Orderflows Trader 2.0 does is it highlights the prominent point of controls, the point of controls that are important. And these often act as support and resistance, especially in range-bound markets, but also in trending markets. They could signal the end of a trend. All right, they could signal the beginning of a trend. They could also signal the end of a trend, and they could also signal. I'm going to show you some examples of how they react in a range-bound market, and I find they work great in markets that have low speculative activity and high commercial activity. Markets that are really dominated by supply and resistance. Great example would be bonds. Whereas E-minis, although they do work nicely in E-minis, E-minis is a market that's really driven with a lot of speculative activity, retail traders, so to speak. And you can see here, this is E-minis, how the markets just react. Prominent point of control here, rallies up to a prominent point of control here, and it sells off. All right. If you have my template, it will color it blue for a buy or magenta for a sell, for a support area, for a resistance area. Now, there are some people that do like to just, they use the prominent point controls as the basis of their trading plan. And some, I dare say, trade them by themselves, naked, without any confirmation. But I think, when you add them into your existing method of trading, it's going to help you find turning points in the market. Now, market sweeps are areas where big traders sweep the market. They buy or sell through several price levels in one trade. And what that means is, say the market is 2 bid at 3. Okay, and you're a crude trader, and you just did a deal in the physical market, and futures are going to react to it. So what you do is you pay up to 7. Right, the market's 2 bid at 3. You bid, you sweep the market up to 7. You literally buy every offer all the way up to 7, and you turn it 7 bids sometimes. And this happens a lot in certain markets. Crude is a great example. Markets where there's a lot of physical activity going on. Physical, there's like in the cash market that's being traded, and then someone will hedge a position in the futures. And actually, the old NYMEX access system, it was the old electronic system that was out in the 90s by the exchange. It actually had a feature in there where you could sweep the market. That's where traders that have been around for a while will talk about sweeping the market. The old Karate Kid analogy, sweep the leg, Johnny. You used to say that on the trading desk, sweep the leg. But It happens, and it can show up in the order flow. And again, if you don't know what to look for, you're not going to see it. And one of the features that I've added into the Orderflows Trader 2.0 is to highlight these market sweeps. So you're going to see, a darker red arrow or for a sell, or a green arrow for a buy, a dark green arrow. And oftentimes they come out of nowhere. Market is going sideways. Someone sweeps the market, thinks the market's going to sell off. They sweep it, and look at what happens. This is NASDAQ. We're trading from the 71, 72 area. You get a sign of a sweep, and we sell off nicely down into the 71, 50 areas. It's a 20-point move there. Not every example is going to be as great as that, but they are quite nice when you see them. And what does it do? It sells off to an area of a prominent point of control, and then it starts rallying. Multiple imbalances. Now, if you're familiar with order flow, you understand the concept of stacked imbalances. Stacked imbalances are imbalances that are neatly stacked on top of each other, one on top of the other. But a multiple imbalance is when there are 3 or more order flow imbalances in a bar. They don't have to be stacked on top of each other. You could have one, and then a regular price level with no imbalance, then another 2 imbalances. That would be considered a multiple imbalance, and I treat them actually the same as I do a stacked imbalance. And you can see here how the market is just sort of drifting lower. Boom, it hits the low. Aggressive buying comes in. You've got multiple imbalances here. You have 4, 1, 2, 3, 4. And then the market starts making its move up. So what's happening is, the market is sort of, it's coming in for its low, like an airplane coming in for its landing. An airplane doesn't land at a 45-degree angle. No, oftentimes it just sort of comes in, starts forming its base, and then it takes off again. And that's what's happening here. We're coming in at these low prices. Traders recognize that these are very good. These are low prices. This is a good buying opportunity. They start getting aggressive, and they start buying it. You have the aggressive buying coming in. It's showing up in the imbalances, and you see how the market starts rallying again. So, those are the 3 main things. I'm not talking about the enhanced trap traders because, honestly, it's a bit more complex that I have time for. But it's going to be very useful for you. Let me just leave it to you at that. So the second thing I want to talk about is letting the market tell you when to buy or sell. Again, I'm not trying to predict the market. I'm not trying to predict highs or lows. I'm letting the market tell me that, hey, a low is being made, or hey, a high is being made, or a trend is underway, get in. It's not trying to predict, where the market is going. It's reacting to what the market is doing and getting on board for the ride. Now remember, every trader has access to the same information. It's how you use it that makes the difference. So rather than just try and guess the future direction of the market, just listen to what the market's telling you what the direction is going to be. Again, traders oftentimes like to overcomplicate things. And they sit there, they sort of try to read the market like tea leaves and say, oh, I think we're based on this. I think, down, a week from now, we'll be trading here. Why bother with that? You could just try and get on board with, if the river's flowing in one direction, right? You throw a piece of bread into it, it's going to float in that direction. You are that piece of bread. You get on, you jump in, you ride it until it's done. It's like surfing, right? You ride the wave. So prominent point of controls, perfect example. Okay, this one, I didn't have the settings properly when I pulled up this chart. This was the default settings, not the settings on my template, but this is actually a buy here. So you can see we're coming down into this low. We start forming our base. Boom, you got a prominent point of control indicating supportive buying. And then we rally up. Here you got signs of a sweep. You got multiple imbalances. So if you're not convinced with just this prominent point of control, here you have a bullish ratio. Then here you got the multiple imbalances. You got the market sweep. Then you can see how the market just rallies from 63 all the way up to 68. Okay, here we're in a trend. A trend is forming. Okay, we're starting to rally. Multiple imbalances. This bar, this bar, this bar. You have stacked imbalance, but you also got multiple imbalances. And here you have sweep. This is a dark green arrow. Another sweep here. So, buyers coming in. Buyers being aggressive. Pulls back. Hey, you know what? I still think it's a good buy. Someone sweeps the market up. You got more multiple imbalances. Market pulls back. Where does it pull back? Notice how it pulls back each level to these point of controls, each previous point of control, previous point of control, previous point of control. Someone sweeps the market again, and the market just keeps going up. you should have been convinced by this bar, not this third bar, but even if you are at this third bar, you're still catching a nice move here. Again, it's about letting the market tell you what's happening and reacting to it. You know, you see a multiple imbalance as you start breaking out of a sideways zone, right? We're basically trading sideways in here. Boom, multiple imbalances. Boom, another multiple imbalances and a sweep. You know, at this point, it's all systems go. This is actually the delta surge going on right here. I can tell in the delta, you got increasing delta here. That's also a bullish sign. But I'm not even talking about delta in this presentation. I'm just talking about these new tools. But if when you start putting all the pieces together, really, you know, these setups become second nature, and you could really take advantage of it. Okay, here you have the divergence, prominent point of control, and multiple imbalances. Now, if you're familiar with my order flows analysis, you know that what a divergence is. That's this red arrow here. And then if you have a blue number in the ratio, that's a good sign. That's what you're looking for. You're looking for blue numbers. That means that the ratio is a certain number, above a certain number, or below a certain number. And I'm not really concerned with what the ratio is. I'm more concerned with if it meets the threshold. So in this case, it does meet the threshold. That's why it's blue as opposed to black. Black is just indicating your normal order flow. So again, if you have my order flow software, and the programmer just wanted to add the ratios into it, every ratio you have, it's not going to make sense to you. That's why we color the important ones a certain color. So here you have ratio and divergence, and this is a bread and butter trade. There's people that just trade this by itself every day and have very good results. But when you start adding in other aspects of order flow, here, this bar here, you have another divergence. It's the same high. You've got a prominent point of control. Okay, so the first bar on your high, you have divergence and a ratio. The second time you hit that high double top, you got you got divergence and a prominent point of control. But say you're not convinced yet. Then here, as you start coming off, you got the aggressive sellers coming in. You got a multiple imbalances. That's this purple box around the bar. And then you sell off. And you sell off where? You sell off to a new low. That's why you have another divergence here. And the other important thing is, notice you're at your high, and look at this delta. It's all negative. That's also very important. But ratio and divergence is go time. Divergence and prominent point of control, it's also go time. You're seeing multiple imbalances off the high. It's also go time. Each one of these bars is telling you, hey, don't get long, get short. Price action traders will say, well, we hit the high, we came off, we started rallying back up to the high, get long. No, you got to get short here based on the order flow, not position yourself to get long. And this is the same thing almost. Here you got divergence, but this second bar, you have divergence with a prominent point of control, and you have the ratio afterwards. Now, people that have been around, you've been using the Orderflows Trader just the regular Orderflows Trader. This is a trade setup I've been talking about for years, literally since I started offering my software. Is the divergence on the bar at the new high or new low, and the bar afterward with the ratio. I still consider that a valid setup. And so you got your ratio, you got your divergence, and you got your ratio. But in this bar, you have your divergence, prominent point of control, and the ratio. So you got three things going there. Also, the deltas are strongly negative. You're up here at your highs, you got mostly negative delta. Again, put the pieces together, and you start to see a clearer picture. So you have all the signs here. You're at your high, you got negative delta, so you got net aggressive sellers. You got your divergence, you got your prominent point of control, indicating there's resistance up here. Then you got your ratio here. This is a bearish ratio in the sense of price rejection. You got a single print also. So what's happening is the market's selling off. It tries to come up a little bit, but these higher prices are being rejected, and we continue to sell off. Okay, so here you got a bunch. You got prominent point of control, you got your ratio, multiple imbalances, you got your sweeps. Come down into a low. You got your prominent point of control, you got a bullish ratio. Okay, prominent point of control, bullish ratio is 0.6833. Come in here, form a double bottom, another prominent point of control. On this bar here that's on the low, you also got multiple imbalances. Right, 1, 2, 3, 4. They're not stacked neatly on top of each other like in the next bar. But in the next bar, you also got multiple imbalances. But you also got a sign of a sweep happening in here, a market sweep. And boom, what do? We rally up. All right, we come off a little bit and continue rallying. This one is a sign of some sweep trap traders going on right here as well. But, you could at least caught part of that move. It's not like, oh, you'd buy it here and sell it up here. No, you'd have bought it in here and sold it somewhere in here, hopefully. Ideally, you should have been buying down here, based on this first bar here. So you don't need to try and predict the future. Just trade on the information that's in front of you. Don't try to predict highs or lows. You don't have to. But if the market is telling you, hey, there's a low being formed here, okay, try and get in on that move back up, right? Or if you have a high being formed, okay, great. After, the high is set, that's when you get short. You don't sit here thinking, oh, I'm going to try and pick this high. No, hey, the market's telling you, hey, there's a high forming in here. Okay, if you know there's a high forming, what's the trade to take? Is to get short. You're not going to be buying at the high thinking we're going to make a new high. If you think a high is being made, you position yourself to take the move lower. So, trade in the present based on what's happening now. Don't necessarily trade, on the past. And when I say the past, I mean, stuff from like an hour ago, 3 hours ago. People that use moving averages or even some sort of indicator based on a moving average, sometimes they're taking information that happened 50 bars ago, 100 bars ago, and really, how is that useful now? And again, this sort of goes back to what I just talked about, trading in the present. People are always trying to predict what's happening in the future. Concentrate what's going on right now. It's like in dating. There's some girls that will go out on a first date and they're already planning their wedding and how many kids they're going to have and all that stuff. And then, the guy breaks up with her because she's not concentrating on what's happening now. She's concentrating on the future, trying to predict the future. Don't do that. Concentrate, look at what's happening now, base your trading decisions on what's happening now based on what the market is telling you. And, just remember, no two trade setups are going to be exactly the same. There's numbers involved in terms of volume, and it's not going to be exactly the same. Ratios are not going to be exactly the same, but in general, they look very similar. That's why some of these charts look very similar, is because that's what happens. It's sort of I don't want to say it's a pattern, but what you're looking at is ratios. You're looking at point of controls. You're looking at delta numbers, and you want it to be around a certain threshold. And once you reach those levels, then those are the trades you're going to take. It's not going to exactly be every delta that's 1,000. No, because not every bar delta is going to end up on 1,000. You can see every bar's got a different delta. And not every low is going to have a prominent point of control. But you can see here, right? This is Bunds. How the market is selling off. You got a nice prominent point of control here at the low. You rally up to your prominent point of control here. Now this is a move from 160.95 all the way to 161.25. And look at this time, from 138 to 151. So, about 20 minutes for that move. And it's just a straight up move. There are some traders that just use prominent point of control and trade that. I prefer to sort of add a few more things into my analysis than just using prominent point of controls, but there are people that use them. And again, on range, this is a trending market. You can see how it caught this trend up here. On a range bound market, you can see how it's picking every high and low. You sell off to a prominent point of control, you rally to a prominent point of control, you sell off to a prominent point of control, you rally back up to an area where you got the multiple imbalances. Trap traders, same thing. There are some traders that use this as the basis of their trading plan. And you can see here, swing low to a swing high to a swing low. Now, some people say, well, you got trap traders right there, it didn't work out. Well, where were you going to be taking the trade? You should be taking it up here, not down here. Again, take things in context of the market, right? Where do you want to be getting short? You want to be getting short after a move up, not after a move down to get short. You want to be getting long after a move down. You're looking for an area to buy, not area to sell. But even if you took it, say you got short off this, it just went sideways. Yeah, you would have taken a loss, but you had a nice winner, then another nice winner here. I mean, even if you got short here, you're not going to hold it because you got a buy signal here. This is a problem with traders make is they get short off this bar, which they shouldn't have in the first place. They should be short from up here, but they get short here, and then they get a buy signal, and then they just sort of sit here. Well, I'm not taking the buy because I'm still short. I'm gonna let it work out. No, if you're trading any type of signal, and you get a short signal, then you get followed up with a buy signal, you got to get out of the position and think about getting long. You're not going to stay here and stay short and hope it works out. Think if you're a fundamental trader, okay, and you're long the market because there's a drought, okay, then all of a sudden it starts raining, okay, and you're like, well, we've been in a drought for a week, for a month rather, and it's just a little bit of rain. I'm just going to stay short. If it starts raining, the whole reason for being the drought is there. Now, you're not going to stay in that position, are you? No, because the prices are going to start going down, because as more rain comes, the crops are saved, so to speak, and the whole reason for being long, your reason for the trade being the drought is over, right? You don't sit there and say, well, it's going to dry up and we're going to be in drought conditions again. No, everything's changed. The fundamentals have changed, and it's like that with trading with order flow. You have your reason for the trade, but then another reason comes in. Now you have a fresh reason. If you're trading, some moving averages or whatever, or things based on the past, that look, have some periods where you're going back 20 bars, you're not taking into account what's happening now. You're basing it on what's happened, off the charts already, from the long time ago. So here's the prominent point of controls, ratio, multiple imbalances. We're forming our low here. I know we have a divergence earlier, but I'm not talking about that one. And you got your ratio here, 0.1068. You have your prominent point of control as well. Next bar, you have your multiple imbalances. So here, it's just letting the market tell you, hey, you know what? We're going to start to rally off this low. You might want to think about getting long. And then what do? You rally up all the way up to another prominent point of control where the market starts to selling off from. Then you got your trap traders up here, and you got a bearish ratio, and you start going down. But again, you can be getting long from here, 65 all the way up to, the 90 area, before you get a bearish sign that the market's going to start selling off. Catch those rides, catch those moves. Here's soybeans. Okay, so I showed you soybeans, I showed you Dow, I showed you crude oil, E-minis, Euro currencies, different markets. It's the same concepts you're looking at in the different markets. So you got trap traders, trap traders, trap traders. You also got bearish ratios. This is a 3 in a row. This is a setup I like just with the ratios. And you got a prominent point of control indicating resistance up here. So what's going to happen? What do you expect is going to happen? We're going to sell off. If you're a price action trader, oh, we got our high, we've come off, we're starting to move back up, let's get long. No, you can't, based on the order flow, because it's telling you got resistance here. Even in these are bearish ratios indicating resistance. You got trap traders. What's happening is all these price action traders are buying it, thinking the market's going back up. Instead, they're stuck. They're long and wrong. Market comes off, they try to move it back up. Market comes off, they try to move it back up. But instead, they're just fighting it. They're paddling up river, against the flow of the tide. Then it comes down here, and where does it stop? It stops in an area where you have a prominent point of control, and it just goes sideways from there. Just because you have a prominent point of control doesn't mean it's going to immediately bounce and rally. More often than not, it does, but it can also go sideways like this. What's going to happen after a move is 1, it's going to reverse, 2, it's going to go sideways, and 3, it's going to go sideways and then sell off some more. And it's your point, your decision, or sorry, your job rather, as a trader, to notice that. Hey, this move down is over. You've hit this prominent point of control. You've hit an area of support. Okay, now it's time to get out and reassess what's happening in the market. Again, trap traders, this is bonds. And you see how the market rallies up, market starts selling off. What happens? People start coming in here thinking, hey, you know what? We're just getting a little bit of a pullback. Let's rally, just like it did here. We hit our swing high. Market came down, but then buyers came back in. Buyers are coming back in. They're trying to buy it, but these people are realizing that there's some big sellers up in here. And then you can see it gets slapped. 3 lots trade, 465, 206. That's like nothing in the bonds. You see generally most price levels got, over 1,000 in it, and this is already during the day. This is 8 in the morning. At that time, you should be getting at least around 1,000 at each price level. Well, you got 3, so the market just got slapped right here. And when it gets slapped like that, it doesn't just immediately come right back. It often has more to that move, and you can see how it sells off down here. You got a ratio and divergence here. In this case, it just starts going sideways. How can you tell it's going sideways? Well, there's 2 ways. You got these point of controls lining up at the same price levels, and then you got bearish ratio, bullish ratio. That's also a sign. When you start alternating ratios like this, bullish, bearish, bullish, that's also a sign of a market going sideways. That's what order flow can help you with, is determine if a market is going sideways. So there's 2 things. Got ratio, 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 bullish, bearish, bullish. You also got point of controls lining up at the same price level, so the market's sort of going sideways there. Okay, so the last thing I'll talk about is how to easily see high percentage order flow trade setups. Now again, as a trader, that's what you want. You want the high percentage trades. Oftentimes traders try to trade the trading method, trade their trading system. They don't take all the trades. As a trader, you have to take all the trades that come your way. Don't sit here and try to say, well, I don't think this one sets up properly, I'm not going to take it. No, you have to take the trades when they're there, period. Because what's going to happen is you're going to take the trades that don't work, and you're going to miss the trades that do work. So, don't try to get fancy. If you have a method of trading, you trade it. Don't sit there and try to nitpick your trades, before you take them. If it says buy, you buy. If it says sell, you sell. And again, how do you get high percentage trades is by putting the pieces of order flow together. And what you do when you start doing that, you're really taking advantage of what's happening right in front of you. Again, it's going to there's a debate. Is order flow a leading indicator? Everyone knows that things like MACD, RSI, moving averages are lagging indicators, but I wouldn't call necessarily order flow a leading indicator. I'd call it a present indicator. Based on what's happening right now. So you're coming down into a low, prominent point of control. Right here on the low, you got a sweep going on. You got multiple imbalances. The market's screaming at you, hey, buy me, I'm a great price. You could be buying it here in the next bar at 45 even. What do? You rally all the way up into the 70s, 80s even. Divergence and ratio. This is my bread and butter trade from the original Orderflows Trader, and I still look at it today. I don't need to program anything, give me an arrow up or down. I got eyes. I can see, I got a ratio and divergence. It's go time. These are the trades I love to take. And you can see how it sells off. And I see 118 even, all the way down into the 117.85 area. And again, prominent point of control here, and a divergence in this bar. You even got the ratio afterwards. So you're starting adding a little bit more into the mix, and the end product tastes better. Again, ratio and divergence here, even in the next bar, prominent point of control, multiple imbalances. Again, it's the market is telling you, hey, get short here. Don't think about getting long. And again, if you're missing, say you miss the ratio and divergence, you should be keyed in on the prominent point of control. If you're not, then you got the multiple imbalances. It's giving you so many signs up in here, and then the delta as well. And there's still some, meat left on this move from the 27.48 area down into the 43. That's 5 points in the S&Ps. Some people are happy to get 5 ticks. This is 5 full points, and it happens within 30 minutes. I see a lot of people say, well, yeah, I'm trading this method in the S&Ps, and I made three ticks. Well, what would you rather have, 3 ticks or 3 full points? Here I'm giving you methods to get points out of the market rather than ticks. Here are trap traders, divergence, ratio, prominent point of control, all appearing in this bar. Of course you got the positive delta as well, but that shows up in the divergence. So here you got your divergence, you've got your trap traders, that's the green arrows. They're both superimposed on top of each other. You got the bullish ratio, and you got the prominent point of control here. The only thing, actually this bar also, you have a multiple imbalance. I'd have it turned off on this chart, or I think I have it set to a different number. But there is, sorry, it's not a. Sorry, I was confusing this ratio as part of the footprint. But you have 2 imbalances. okay, I'd like to have 3, but there's 2 showing up in here. I mean, that would really be like everything in the kitchen sink involved if you had a multiple imbalance going on, but you don't. But that's fine. You've got 4 other things going on. You got your divergence, you got your ratio, you got your prominent point of control, you got your trap traders. You're at your low, and it's just screaming at you, get long, get long. I mean, if you're getting long somewhere in here at 42, where's it rally? It rallies all the way up to 47 and more. Divergence and prominent point of control. Boom, you hit it, you sell off. That's what you're looking for. You're looking for these things. It's sort of like you're a hunter. You're lying in wait for the animal to come, before you start doing your thing as a hunter. And that's what trading is about. Trading is boring. You got to just sit and wait. You got to wait for the market to show you something, reveal itself, and then you act on it. It's not about always being in a position. No. You wait for the high percentage opportunities to come along, and you trade it. It's just like playing poker. I mean, I'm no poker expert, but you don't sit there and go all in on every hand. No, you sit there and you wait. Okay, it doesn't set up. It's not a nice hand, you fold. Not a nice hand, you fold. Not a nice hand, you fold. Then when you get a good hand, that's when you press it. That's when you go and you try to maximize the return. And it's like that with trading. Nothing is happening here that's worth getting in a position on. But then you get your divergence. You get your prominent point of control. Hey, things are starting to set up for me. I got negative delta. I've got a delta surge forming in here. Those are the things that, once they start coming together, that's when you get into the trade. That's when you take the trade. It's not about, trying to ride every move up and down. No, you wait for the optimal time to get in. It's like surfers don't ride every single wave. They try to wait for the best wave that they get the most out of. And you can see it sells off from the prominent point of control to a prominent point of control down here on the buy side. So from a sell to a buy. So the move is over. You start rallying back up. You have another prominent point of control right there. Divergence, prominent point of control. Same thing I just finished explaining. You're waiting for the market to show you something, and showing it to you right here with the divergence and the prominent point of control, and you rally back up. I mean, that's what you want. That's what you're looking for as a trader. Finding those moves and exploiting them, taking them for all they're worth. So hopefully by now you can see how powerful order flow analysis is. How I don't want to say how I've made it. It was always out there, but how I've programmed a lot of these, my type of analysis, the analysis I've always been doing, into the software. Basically what I wanted to do is take the thought process I go through in my trading and put it into the software so that you can see the exact same thing. Don't try to overcomplicate trading. That's what a lot of people do. They overcomplicate things, not just in trading, but in life. And they end up making judgments without sound analysis. There's a saying I used to tell people, particularly my ex-girlfriends, don't overcomplicate things. People would spend 80% of the time worrying about things that are never going to happen. And it's the same thing with trading. Sometimes people try to overcomplicate things by thinking about stuff that's not going to happen, or things that's useless to think about. It's like my wife and I will get into arguments about something that hasn't happened, and I'm like, why are we even arguing about this? Or things that happened a long time ago that she still wants to litigate right now. Don't we've already, that's been settled. Move on and think about what's happening right now. So hopefully, if you found this webinar useful, you're going to like my Orderflows Trader 2.0 software package. Now remember, right, 90 to 95% of the traders basically lose their account in their first year. Why do you think that is? Well, because they keep trading the same way that the previous 90% of losing traders do. If it's broken, it's not going to work again. When you throw the water out of a cup, it's not going to go back into the cup. And, if you're trading with methods that are proven to not be successful, don't think you're going to make it successful all of a sudden. You might have some short-term success, but over the long term, no, you're not. And I got news for you. All this stuff has been, all these indicators in the sense of, RSI, moving averages, that's been data mined to death by not only by retail traders, but by hedge funds, everyone just trying to find an edge in the market. And if there is, it's very short term and it doesn't last very long. So again, stop doing what all the other losing traders are doing. Stop flushing your money down the toilet buying some fancy indicator. Rather learn how to trade the market, understand what's happening, take advantage of it, and profit from it. If once you understand how to read the market, trading really becomes simple. Everyone likes to have a red light, green light system, says buy here, sell there. But again, you got to take everything in context of the market. Now, that's not to say that there aren't any trading systems that are worth money. I do know some, and they're very expensive. I know some that have very high percentage winning days out of the trading month, but to get access to it, it costs an arm and a leg, and most traders don't want to pay that. It's not cheap, and I'd rather teach people how to read the market and make the decisions themselves. Ultimately, who's going to be responsible for your trading success is you, no one else. So what I have is the Orderflows Trader 2.0 that runs on NinjaTrader 8. It's the volume footprint chart with all the indicators you saw in this presentation, and you're also going to get my chart template, so you don't have to spend like days trying to figure out how to set up your chart to look like mine. Referring back to the video, I'm going to give you my chart template. I even give you a little video shows you how to install my chart template onto your NinjaTrader. It's just drag and drop basically, and your charts will be looking just like mine. That's really what you want. And normally I sell this for $899, but having the Orderflow software is one thing. Next thing is you got to know how to use it. What to look for. So I don't just give you software and say, hey, you'll figure out order flow by yourself. No, I provide you a lot of further education on how to trade with the order flow. So I give you access to the Orderflows training course, which I also normally sell for $297. I sell it every day on my website for $297. It's 20 lessons. It's 15 hours of video instructions. You're going to get that for free when you buy the software package today. And to sweeten the deal, because I know that you're interested in order flow, I have my Orderflow Inner Circle video series. Now this is 56 videos on advanced order flow tricks. I hate to call them tricks, but tips and analysis. And this is different than the regular Orderflow Inner Circle. The Inner Circle, there's additional indicators that come with it. This one is just the videos where I really talk more in depth about different order flow trade setups. Even if you just get one or two things from this video series, it's going to be worth it to you. But I'm going to give you that for free. And like I said, it's 56 videos. It's not like a 2 or 3 minute video. These are videos that go anywhere between 30 minutes to an hour and really cover a lot of ground on order flow. Or this is stuff that's never been shared to other people, just my inner circle group. And you're going to get access to that for free. So, when you start adding it together, the software is $899. The trading course is $297. The video series is $497. That's already $1,693, $1,693. But because of Investor Inspiration inviting me back to their presentation, I'm going to give you also access to the Trader Kickstart training, which is it's a 12-piece video course on the mental side of trading, the mindset of a trader. Why traders succeed, why other traders fail. How to put together a trading plan, how to beat the stress that's involved in trading, how to get into a daily routine. A lot of that information that traders take for granted. People think, well, I can just start trading and be successful. No, you also have to have the right mindset, and that's what the Trader Kickstart does. Is it helps put you in that mindset, and you get access to that for free. So you add all that up: $899, $297, $497, $297. That's almost $2,000. It's $1,990. But you're not going to pay that. You're going to pay just $749. So one-time payment. That's it. You're not paying any more payments. No monthly fees or any other payments in the future. Of course, you do need to pay for NinjaTrader, but actually, my software will run on the free version of NinjaTrader. So if you have another trading platform that you use, boom, you install NinjaTrader on another PC, run the software on it, make your trading decisions, trade on your other platform. You can do that. NinjaTrader, you can buy a license if you want to trade through an approved broker. But there's a lot of people that use the free version and run my software on it. Of course, you also have to pay your data fees. But if you have a brokerage account, you're only paying like $5 for CME $5 for CBOT. So go to orderflows.com/oft2.html, and I'll take you to the payment page. And so, other people are saying, don't just take what I'm saying. Other people, there's some people that don't like me and post negative things, but there are people that Orderflows Trader has changed their trading. You can see here, Sheila writes, your Orderflows Trader software is remarkably helpful. I can see clearly now what's happening in the market. Like, for example, who's in control of the market on a very specific time and who's getting weaker as well. So again, and this is a person that, wanted to help supplement their income by trading. They're not sitting there thinking they're going to become the next Paul Tudor Jones. No, they just want to make, eke out, grind away at the market every day and get some money in their pocket, extra money in their pocket. And, I'm always pleased to help traders like that. People that want to learn. So go to orderflows.com/oft2.html, and it takes you to this page. Scroll down to the bottom, and there's some videos on there. There's actually a 30-minute video on there, 40-minute video actually, where I walk through several days in different markets and explain to you, show you, you would buy here, you would sell here. This is what's happening in the order flow. You should watch that video. It's on there. It's not this first one. It's the second video on there. But what you do is when you get to this page at orderflows.com/oft2.html, you scroll down, takes you to this page. Now you see a timer here. Okay, and when this timer hits 0, which is Sunday night, you're not going to get access to the Trader Kickstart anymore. You'll just get the regular bonuses. So click here, buy now, I want this, and it takes you to PayPal. PayPal processes your payment. I don't get your credit card information. I don't want your credit card information. If you ever bought anything from eBay, chances are you're familiar with PayPal. That's the payment processor most everybody uses on eBay. So everybody knows what PayPal is, or should know. And if you don't have a credit card, you could also pay still, down here, pay with debit or credit card. And just go to orderflows.com/oft2.html, and you're going to join Orderflows today because you see the power of orderflow trading and analysis and how it can change your trading. You want to understand what's happening in the market. You want to find low-risk trading opportunities, but more importantly, and this is the big thing, is you want freedom and fulfillment in your life. Like for me, I get fulfillment from teaching other traders. I already have the freedom. Trading has given me that freedom in life to do what I want to do. If I want to go on vacation with my family, I can go on vacation with my family. It's always been that way. Trading has been very rewarding to me as a person. So go to orderflows.com/oft2.html. Now, in the beginning of this presentation, I said you can get a copy of my book, Trading Order Flow. Go to this link, orderflows.com/book.html. And you can download, you got to enter your email, okay? And you're going to be put on a list so that you can be notified of other presentations I do in the future or any specials I got running. So don't be surprised. Oh my gosh, you sent me spam. Well, that's the trade-off, unfortunately. But, at least you get a nice information out of it. So go to orderflows.com/book.html to get information on how to download my book for free. So right now, go to orderflows.com/oft2.html and get on board. Don't miss this opportunity to change your trading. Think about where you are right now in your trading. Think about where you were 6 months ago. Are you any better off? It's not a big investment I'm asking you to make. A lot of people tell me I should be adding a 0 onto the price of this, but I don't. And I don't want to, because this is sort of my way for giving back to people. Yeah, I charge a nominal fee, but I got software developers to pay and all that stuff going on that I can't give it away for free. I'm not a programmer. I got to pay people to do the programming for me. So, think about where you are now. Think about where you want to be, how you're going to get there. Okay, think about those choices you have to make. Or, sometimes I get people saying to me, oh yeah, I bought your software 2 months ago, but I haven't installed it on my computer yet. I'm thinking, why? Why not? It's like, do you want to make that change in your life? If you do, get the software. If you don't, if you just want to keep on going, sludging through life, trying to figure out the markets by yourself, okay, go ahead. But if you really want to change your life, I'll say, change your life, but, want to improve your trading, then get the software, get the training, go through the training, start looking at charts, start understanding what's happening in the market. So thanks everyone, and again, you'll go to orderflows.com/oft2.html, and I hope to see you on the inside. I mean, take advantage of the bonus. I mean, it's a great bonus opportunity. So thanks everyone, and have a great day. Bye bye.